All right, in this video, what I'm going to be doing is analyzing different markets, taking a look at their tops and bottoms, basically the accumulation, distribution, etc., and identify why they work and why they didn't work. Because a lot of times with the white collar traders, they assume that something is a change of behavior and or a sign of strength, sign of weakness, and it doesn't work. So it's extremely important to identify why something works, why it doesn't work. And that means when you're getting information, do not just backtest or look at what works, but you have to look at what doesn't work. In fact, that will identify the errors. All right. So we'll start over here. All right. So I will be using the middle chart and the right chart on the right. The middle chart is like your higher time frame or the middle time frame, and the one on the right is your entry time frame. All right. So we see the first thing is the higher time frame is an uptrend. It's above the 50-day, above 20-day. All right. Already, when price is above the 20-day, above the 50-day, do not short. And when price is rallying above the 50-day and the 20-day, definitely do not short, because there's a lot of traps that are set up that the weakness that you'll see is purposely caused so you get in short, and they can cause short covering, taking the market even higher. Okay, so anyway, that's a side point, but I'll talk about that later. So now we see that the market is rallying, right? It's above the 50-day, or if I had a 20-day, it would be above, 20 period, right? So now it goes up, and then you have your first spot right here of selling. And I'm looking at the chart on the right-hand side now. That right there is selling. That's heavy volume. What is the thing that you notice? You notice that the market on the left-hand side is what? Is at a breakout position in an uptrend. And then you have this selling. What does the selling do? All it does is go to support. If all the selling is doing is going to support, then the purpose of that selling is to go to support. The purpose of that selling is to test. The purpose of that selling is to go to support and test and reaccumulate and continue. And what happens? The selling takes the price down. Here you have a print, high volume. Why? Reaccumulation. This, where is this shit? Here. That's reaccumulation. So the selling is induced. The selling is just taking it down, reaccumulate. There's the print, and take it back up. All right. So remember, we're in an uptrend. This is what happens. Selling is done to take it to support, to reaccumulate, to take it higher. That's one reason. All right. So one reason is reaccum. The second reason, and I'll show that, is over here. You see the market going up. You have volume at the top right there. Then you have an upthrust right there. Then you have your sign of weakness right there. And you and a confirmation, all that shit, right? You have that as well. What happens? Back. Reaccumulated. Big wave up. You see? So the selling that occurred took it to support. When it goes to support, it did a spring, a false breakdown, right? So it does a false breakdown, springs it and rallies it. This is your indication of strength coming right back in. So this is, where's my text? This, all of this, you could call what is short? Is to cause short covering, to create short covering, to take prices higher. This weakness or selling takes the market down. and the shorts will come in. They're gonna come in somewhere here. They see the upthrust, whatever. Then, so we'll just call this. I think the term is inducement or some shit like that. I don't know what the. It's just to create short covering. Okay. I don't know what the term inducement means. It's another ridiculous term. And it go, and then it goes up again. All right. Again, you see selling. You see selling, and like, oh, this is good. This is good. Let's short it. Oh, look, an upthrust, sign of weakness, took out the low, blah 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 blah. Right? So, where's the upthrust? Right there. Oh, lack of demand. Oh, look, confirmation. See, it went down. Upthrust, fucking confirmation, right? All that shit. That's what they teach, right? Now, what happens? You're screwed again. So, this is all weakness. This is weakness. This is weakness. This looks climactic. Yeah? This looks climactic. That looks climactic. You have a breakout, you have weakness, you have upthrust, you have confirmation lower low. What happens? Taken out. You know why it's taken out? This is all because they want to take it down to run stops under here. You see? So take it down to support or right below support to run the stop. That's why this number here, 6, is the biggest in the rally. 3, 1, 1, 2, 0, 1, 6. Why? Because the purpose of it is to run the stop. This 6 is evidence that it was successful in running the stop because it's the most amount of volume in 1, 2, 3, 4, 5, 6 bricks under the low and reverses back up on increasing volume, biggest in 14 bricks. So the stop hunt was successful. This is a successful stop hunt because they found the orders. How you know? Look at the volume. Biggest in 14 bricks, 6 here, bigger than all this shit, right? Reversing back up. Successful stop hunt. That's all it is. So this is the turning point for the purpose of a stop hunt. Okay, so far I cover actually this is the same shit too. Look, if I draw a line under this low, right? And you look at this leg, 3, 2, 2, 3, 1, 1, 4, 2, 3, 1, 1, 2, 3, 4, 2, 3, 8. From the low, 8. Why? There's a stop hunt. Stop hunt / short covering. If you come in here, bang, rally it up. So to make it very simple, you see the purpose of it is to reaccumulate and reaccumulate stops. Stop hunts. All right, now there's also maybe I have to give another example. This is one. Let me see. Let me put it like this. One is for reaccumulation at support. Second, that's reason one. Second reason is just taking profit, because they're not going to get out all at once. They got out in partials. Whoever accumulated at the bottom is going to get out in partial. So it could be to reaccumulate at support, taking some partial profit. And the third reason, what is this damn thing? 1 second. Is a stop hunt. So turning points can occur because they want to reaccumulate lower prices, so bring it back down to support. Maybe there's no breakout buyers or something like that. Bring it down to support. 2, take partial profits. 3, stop hunt. Typically, they're going to support or right underneath it to do a stop hunt. I mean, take a look at this. Can you tell me why in this right here is the highest amount of volume at the bottom? Buyers came in, so they started reaccumulating. This is reaccumulating. It's not a stop hunt. If it was stop hunt, it would go right under here, right? So they basically just took it to support, and there's the biggest number, biggest in 36 bricks. Reaccumulation. Here, it breaks the low, 4, and that's stop hunt right under here. Take it a little bit lower, get more volume, stop hunt. What did I do? Here, stop hunt. This is stop hunt. Right here, you see the volume come in? That's a stop hunt. So it goes down under the low, right there, does a spring, successful stop hunt. Down under this low, finds orders. Then goes a little bit lower, finds more orders right here. Increasing volume, stop hunt, successful stop hunt. This successful stop hunt. Here, it looks climactic, and I don't know how to trade this because it's too big. This is just weird, so forget that. Okay, this is a good example also. Right here, you have your volume off the top, right? Comes down right below the low. Right? Now look at this wave, all right? Look at this wave. It has 2, 1, 1, 1, 1, 1, 4. Why 4? If you said that this is a successful stop hunt because on the spring, it has a lot of volume, 4 times all of these other numbers, that's the right answer. So here, your volume off the top, it looks like a change of behavior. It goes right below this low and finds the most amount of volume in the down wave, under the low, on an up bar. Why? This is stop hunt. And it's successful. This is a stop hunt. Write this right here. All right. When the spring occurs, you want to see increasing volume. You see increasing volume. What does that mean? It means it's a successful stop hunt right there. And of course, they do a little bit more of a spring and then bang and then all of this, right? So now we'll continue. Here you have 31, right? So look, you might think it's always climactic, it's the highest, this, that, whatever. This move comes down, it holds support. So, no worries. Here you have some selling, and it goes sideways, and then it breaks multiple lows. Right? Now, is this a change of behavior? I fucking don't know. I know that the breakout held right here. That's a good sign, but there's a lot of volume towards the end of the day, so I can't really tell. I don't like it when change of behavior or the sign of weakness is like the fourth lowest, it's coming from the fourth lowest high. Look, 1 high, 2 high, 3 high, 4 high, 5 high. Should not be coming from this low. It should be coming from up. From the first, second, maybe the third, but not from the fifth. So this is like profit taking. I don't know what it is. But after all of that happens, they stop. They stop the down move right there. Hold. Look at this. You see that blue dot? That's the biggest volume in over 100 bricks. And you know what happens after that? The biggest volume in 43 waves. Do you not think that this could be possible reaccumulation, a line of reaccumulation here? Obviously. Bring it down, stop, buy, 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 buy. Beautiful, right? So, so here's the point. In uptrends, when you get a turning point, do not short. All right? In uptrend, do not short. Why? Because weakness in uptrends can be a stop hunt. It can be going to support for the purpose of reaccumulation. And the third is, which I'm going to show, is to take prices higher by inducing short covering. All right. Was there a fourth? I don't remember. I mean, yeah, it could be partial profit, but it's very hard for me to prove. Like, it's tough to prove. So, but yeah, it could definitely be partial profit. So, but these are the three key reasons. One is the stop hunt. Two is actually short covering. Three is to reaccumulate to go higher. All right. So uptrends do not short. Why? Because turning points, and in fact, any signal, sell signals can really be in uptrends do not short because sell signals can really be something else. One, stop hunts. Two, reaccumulation. And three, short covering. Now I give example of stop hunt and I think reaccumulation. Now I'm going to give an example of short covering, how it's induced. All right, so what the fuck? All right, now I'll give example of this, and you're gonna see. We'll start all the way back here. All right, so market is going. Here, you have a very nice example. You don't really have volume off the top. Well, over here you have some volume off the top, which is about biggest in 44, right there. After that, you have a break. So you're gonna label this, all right, just your change of behavior. Biggest volume in 23 waves, biggest price in 49 waves, has a wonderful breakdown right there. Perfect breakdown. Takes out these lows. What happens? Gets screwed. The question is, why? Why? Why didn't this work? It looks like it's really good. Price volume, rally down, breaks the averages, has some volume off the bottom of the left. You got a fucking upthrust. You know? You have your distribution right there, the box and all that, right? You got all that. But it doesn't work. The reason is it is for the purpose of reaccumulating and stop running. If you take a look at the left-hand side, there's the left-hand side, we see that the whole thing is nothing more than one brick down. In this case, it just went down one brick. It was testing, I think, a potential spring. It did this spring, is springing and then testing the spring, right? So this thing was testing the spring and ready to go. So this is I forgot what the spring. Okay, this is the spring, goes up, sell. So this looks like a sign of weakness and all that, whatever, right? But what is it? What is it really? And over here we see that all it did is a one bar test. It's a one bar test right here on that 6 down. It's a one bar test. So what it could have done is it could have taken out this low, and we'll see. I gotta see if it's. I can't really tell. All right, I'm not 100% sure, but on the left hand side it's a test. On the right hand side, it took out took out um it took out basically took out this area. One, two. It took out these stops. That's what it did. So this actually looked like a straight down hunt under 1, 2. Typically, the last 2 pivots are taken out. If you look at stop hunts, they'll take out the last 2, max 3 pivots, especially if they're connected closer to each other. Now I know what people are saying. Oh, there's some trend line liquidity or some shit. Like, oh, look, this trend line and took out all that. Whatever. The point is, it was on the left-hand side. It's a test of a spring. On the chart on the left-hand side, right there, is a spring and a test of a spring. That's the spring. High volume area. Boom. Test it. Goes. All right. Excuse me. All right. And then after that, it goes up here, does what it does. And again, this could also be some type of reaccumulation structure. I'm not sure. Because when it's choppy like that, that's what it is. Where it's like buy, sell, run, rally. Okay. Now over here, it goes up. Now, what folks will do is like, oh, it's climactic, that's the end, let's sell, right? I get that. All right, now it goes down, goes to what? Now I'm going to explain what this really is. On the left-hand side, it's actually a breakout. And it pulls back, but it's a breakout. The high volume here at the top is an indication of a breakout, not a climax. Yes, it's proven by the test right here and the rally right after that. And it goes down, does all this, right? It tests the creek, which is right here, and then it rallies. The rally is actually telling me that, yeah, it just tested and it's ready to go. And also they started buying right here on this blue dot. Anyway, another story. But the whole point that I'm trying to mention here is not only is the change of behavior in an uptrend could be other things like what I had mentioned, but also the climaxes are not really climaxes. In trends, what you're perceiving as high price volume climaxes can actually be breakouts. So your question is it a breakout or is it a climax? You look at the left-hand side and you see it's going above a high on heavy volume. Now it's in an uptrend, it's breaking out heavy volume. So breakout on a higher time frame will look like a climax on a lower time frame. That's the point. The point is breakout behavior on higher time frames looks like climactic behavior on lower time frames. their volume characteristics of a breakout on a higher time frame look like high volume climaxes on lower time frame. Once again, the market rallies. What do you have here? You have volume off the top. What else do you have? Change of behavior. Right there. You have volume off the top. You have your change of behavior. What else are you going to look for? Oh, yeah, it's a confirmation. Lower low, right? This is the biggest in 100 bricks. This is the biggest down wave in 13 with the biggest volume in 23 waves. And you have confirmation. And in the middle, you have a low volume pullback. Why is it low volume pullback? Because the down wave has 34 and the up wave has only 7. 7 is, what is it? 1/5 of 35? About 1/5. All right. So this looks like a turn. But what you're going to notice again is that it's not that. Again, the market is going higher. It is rallying at this point. It is rallying. So in that rally, the selling that has come in here, all it does is it goes to support. So all it does, it goes to support. It doesn't even spring it. It springs within it. It springs, right? And I guarantee you, folks would see this and they see a high and whatever, and they're going to short it. Guaranteed. Here is where the volume picks up because the reaccumulation is being done here. It doesn't hit the stops. It goes to support, holds support, and you see a lack of supply in as a result of this hinge, right here, up, down, up, down, up, down. That means that what I'm telling you is there's no supply. It could also mean there's no demand, but in this case, it's no supply. Demand pops right here on the biggest volume in about 22 bricks, right in there. And of course, what happens? Boom. Now, what was going on here is you have a very high wave. So what does that mean? That means individuals took short positions. This selling wave, because it had lower lows like this, shorts did come in. Shorts did come in because they had lower lows, and I'm sure they saw this upthrust. So when it went down, did that lower low, went up, was rejected. Where was it rejected? It was rejected right there with high volume, biggest in 11 bricks, and right there. What does that mean? Rejection against this high and going down, making another lower low. Did it break this low? No. Is it in a downtrend? No. What behavior is it? In an uptrend. What is it doing? Rallying. What do we know when it makes these wicks? All this shit that it did was create this wick. This wick is a rejection. It's a rejection, basically. It tries to go down and it fails to go down. When that happens, one of the reasons for that is like a short covering. So how I know it's short covering is because the following rally after it. The following rally after it is telling you, hey, the shorts just got screwed. Look at the size of this. Look at the size of this. Clearly, there's a lot of shorts here that got squeezed. Why? Because they saw the lower low confirmation. They saw the volume, they saw the selling, they saw the upthrust in here, they saw the lower low again. They thought it was going to break, and it didn't. What did it do? It squeezed them. It's all short squeeze. All right. Now, again, what happens? Here, you have high volume. Here, you have selling. It takes out the low, right? Now, after explaining taking out the low on heavy price volume, what are you going to say? Oh, yeah, yeah, yeah. This is your sign of weakness. This is your climax, right? And oh, yeah, we're going to go down, down, down. But as I explained to y'all, when it goes down here, what happened? Volume picks up, which means what? It's a short, not short, what is it? Stop run. Where's the stop run? There are two spots. When it goes below this low, it runs the stop right here. Then when it goes below the low, look at the numbers. Look at how they increase on the up. All right, now, right here, right there. Oh, shit. So it went below this low. Right, below this low, right, there's a stop run, there's a stop run. How do you know? As soon as it goes below the low, volume picks up. As soon as it goes below the low, volume picks up again. They're running stops. They're running stops against the low. So this is a stop run, right below the low. Bing, bing. So the purpose of this selling was to do a stop run, which is proved by taking it below the low and volume coming in. This is successful. Why? The stops were run, and the consequence of that is increasing volume. Stops were run, consequences, increasing volume. Successful stop run. If the stops are run, the volume has to increase. So what this is telling you is the stops will run, and now and that's it. So stops will run. Okay. So what the point of all of this is that, and believe me, like no matter what method you use, you are going to get the cell signals. If you use averages, if you use oscillators, if you use Wyckoff, if you use GAN, if you use Hurst, cycles, whatever, the selling is automatically going to produce cell signals. It's going to produce divergences, it's going to produce cell signals. And what happens after? It goes right back up. So the point here is when the markets are in uptrends, do not short, because cell signals can create cell signals, or let me just write selling is done for the purpose of reaccumulation at support as well as stop runs. What else? Short covering. So selling in uptrends, In uptrends, selling is done for the purpose of reaccumulation at support, stop runs, and short covering. So what does this mean for you? It means don't sell in uptrends because the probability is very high that all you're going to do is get a move to support where there will be a stop run and shorts will cover because of the reaccumulation that takes out the high, which leaves you high and dry. The moves are not worth it. You will lose money. Okay? So the old adage, trend is your friend and all that. You want to trade on the side of trend and the cycles as well because of these reasons. These are the three reasons. The selling that you see in uptrends is manufactured for the purpose of reaccumulation support, stop runs, and to for induce short covering to take to new highs. All right. So then and this is not within that schematic or model or anything like that, but it should be. So so the question is, when does this work? And the answer is when you have trend on your side and you have a rally, that's when you look for the buy signals. When you have trend and you have rally and the rotations are favorable, meaning the cycles are up, the cycle is up, the trend is up, these two things must be true, and you are at a level. So you need three things. When you have cycle plus trend plus level. Now I'm going to show you that. Okay, so we see that this is natural gas. Right, currently natural gas is in a downtrend. All right, so see that is in downtrend. Of course, what's happening? Now on the bull side, they're failing. You see? This right here looks like buying with a climax. This like here looks like a higher high. Yeah? It looks like, oh yeah, that's a buying and a higher high. What happens? Fails. This right here looks like buying. It's the biggest volume in 49 waves, biggest wave in 18 waves. What happens? Fails. Big wave, little bit of a higher high, takes out whatever structure, blah, blah, blah. Takes out this high, takes out this high. And what happens? Sold. Okay, what about this? Goes up, goes straight down. What happens? Sold. Okay, finally, you get a counter rally that works. And what happens? Here, finally, you get your climax, you get your change of behavior. Get rid of this. Right? You get your climax, you get your change of behavior, you get your test, and it works. right? It works. The selling works. Why? Because in the middle time frame here, you have a downtrend and you have a rotation down. It goes down. It's cycling down and up and down and up and down and up. That's why it's working. Here, 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 here. Now again, these guys are going to, there might be some covering or whatever. Takes it right back up. And now again, there's some selling, right? Some selling. What happens? Test, and it works. Now, I don't know if it's going to come back up and do whatever, but it looks like it's working. Where's the climactic behavior? It's not really climactic, but you have some selling up here. So right there. And you have a nice selling right here. Which initiates, the break. Chances are this is continue going down. If it does come up, it'll still feel some pressure and go back down some. You'll see that. All right. So why is this working? It's only working because on the middle time frame, you're trading on the side of trend, and you have a level, and you have a pullback. That's why this is working. So basically, this is the reason. Whereas the long side will not work. This one worked, but predominantly this one comes back down, gets screwed. This one fails. This one, this one, this one. This one had a test, went up, and then right after that, it would be a break even. So it's for the same exact reasons. Here, for sure, folks would be like, okay, I want to buy the pullback. I want to buy the pullback. And they just get taken out right there. You see this? Low? Why is the volume high? Why is the volume high? Because those who got in, this is the breakout. These are pullback buyers. They both are out right there. Right there. And the ones who shorted early on are also out. They're shorts plus breakout buyers stop plus pullback buyers entering here, all being taken out. So, okay, so the whole point of all this, the entire exercise, is to understand that selling is for multiple purposes, not just for changing trends or to give you a high RR risk reward ratio. It is for multiple reasons, and you need to know what those reasons are. Is this selling for the purpose of running stops? Is this selling for the purpose of reaccumulation? Which basically is the same thing, because that's what you're doing. So let's just call it stop running reaccumulation. It's one thing. Second is this purpose of inducing shorts to make them cover to take the market to new highs, right? These are all the reasons selling is done, and you're not going to get that RR for sure. And your probabilities also decrease. So this is the reason you want to trade with trend and the structure, the cycle. You want to see the market as cycles, like up and down and up and down and up and then down, and look for the entry. All right, that's all, folks. Take care. Bye.